Ladies and gentlemen of the crypto space, we're live on a Wednesday, November 15th at 11:49 a.m. Why are you here? You are here because crypto is interesting again. It's nice to see these markets doing what they're doing. And I would like to remind folks, and I've talked about this and will continue to talk about it, path dependence versus destination dependence. And that's a very simple topic, but it has the potential to dramatically affect the way you engage with markets and the way you succeed or completely fail in markets. And I strongly encourage destination dependence, and I rarely ever engage in path dependence. And literally, that's the difference between spot and leverage, or longing and shorting. So longing is clearly you're path dependent on appreciation, and shorting is clearly you're dependent on depreciation. Whereas spot, nothing happens, whether there's appreciation or depreciation with regard to the actual position, other than the value going up or down. And I'm not too worried about the value be going up or down when my destination is what I'm thinking about. I am guaranteed to underperform the shit out of many people. You can make a lot of money being path dependent. But what I am guaranteed with my destination dependence is peace of mind. And I have learned to enjoy the successes of others that potentially have more capital or have increased skill sets with regard to path dependence. But I have other things I focus on in my life. I tell everyone what I want at the destination. And I just want to click a couple buttons a week and have enough income to do that instead of work. And that's the destination I'm looking forward to. And literally the only variable, there's two variables: invalidation of a narrative, which is the failure of an investment, and the other one is just time. So logically, if you have destination dependence with a handful, a small basket, a well-crafted portfolio of shit that is cash flow positive enterprise, novel enterprise, if one of them fails, two of them fail, all you need is one or two of them to succeed by 2030, and the potential scale and scope of capital inflow into this emerging market, and that's all you need. So, and what we look at on a daily basis is stuff to pass the time. We look at chart data to pass the time, to give us a sense of where we are on the path. How do things look? Does the market look like it's falling apart? And that what I've learned over the years is that doing this, you need to train yourself to find comfort and also spot potential narrative invalidation if you need to adjust the composition of the portfolio. But at this point, 3 years later, post 2020, we have a nice concentrated set of assets. As I've said, out of the entire crypto space, was there like 24, a dozen to 2 dozen protocols that have any structural systemic meaning or potential or capacity, have shown traction, have shown to be effective base layer, something that other stuff is going to build on. And this happens to be one of them. And it's finally the case that Frax is breaking out of range. That's nice to see. Well above previous highs. Check this out. So this is actually quite comforting. I mean, you could go from that range. So let's say right about there. So that's nice. That's a breakout. And that's a confirmation of a breakout because there was a bit of a retest. Bear in mind, this is only the daily chart, so let's go to the weekly. That's a hell of a breakout from a weekly chart perspective. That's pretty cool. So the last time we saw Frax in this type of position, it was trajectory $14. And this is obviously just Frax denominated FXS denominated in Frax, which is a relatively new LP. So this isn't giving us our historic values and our SEX high time all-time highs. But this is a nice chart, and I like denominating it in Frax because this is also on FraxSwap. So this is a nice representation of really what FXS is doing. And by golly, that's looking good. Woo! So bear in mind, I don't capitalize from price appreciation. My destination is VEFXS. It already has gauges, and the gauges are modestly productive, 7 and change percent. And base VEFXS produces, a couple of percent, a percent or two, depending if you have an LP. That's another story. So it's not the most productive component of the portfolio, but it's certainly not productive. So that's just nice to see. Prisma going horizontal as expected. That's my base case. Sure, could depreciate uh, if it's a not adequate flywheel, but thus far, 66 and change percent has been consumed. There's about 2 and change mil in circulation. I like watching circulating supply go up. Market cap has about doubled, give or take, and price goes horizontal because circulating supply is significantly increasing. This is for the next 3 weeks is strong inflation, increase in circulating supply. So if you see this go horizontal for the next 3 weeks, that's cool. Eventually, you see some appreciation. People that have their excess supply and a couple, of the 2 and change mil that are not in LP or not deposited into, liquid staking or whatever. Those are their opportunities to buy. So the capital gets drawn in, price goes up, $1.90, comes down to $1.30, comes back to $1. That's the behavior that is my expectation for this asset, considering how the tokenomics, the monetary policy are designed. $1.90, $1.30 comes back to $1, but horizontal price action. And it has been doing this more or less thus far. Early signs, it was the unlock of the points. That was just obviously gross liquidation. Came back to literally about an average. So this looks very nice thus far. So obviously, if for whatever reason, because clearly if there's sellers, there's a buyer. So many people were buying literally all the way down. Albeit in the crypto space, it's LP, so it's automated market making. So it's people just the LP rebalancing. So you can't say someone voluntarily bought at these prices, but that's how you get a chart that looks like this. I like what I see, and I have a bit of a position, about 12 and change right about now of LP, which has been growing because there's been a fair amount of returns, and the airdrop was nice. Gives me a nice boost at 2.0, 2x. So when you claim, it turns out my 2x LP is a little bit higher than the rentable boost. And that's also nice. So my sentiment here is it's a relatively modest small position, 1% give or take. And I'm just accumulating. This is kind of like a sentiment that many people take with regards to the HODL narrative. It's, all right, I'm going to see how much Prisma I could accumulate, and I'm not interested in selling it, and I'm interested in Hidden Hand coming online. We'll see what Vodium does, but I expect some cash flow at some point. So the tokenomics hopefully are different to such a degree that we could see 5x. That'd be relatively high considering fully diluted value. You see $5 at 300 mil max supply, albeit how long does it take to get the max supply? I'd have to look into the emissions schedule, but let's say it takes a long time, and 800 mil market cap, a bill market cap. These are not unreasonable things if the entire market levels up between now and 2030, and you have multi-billion-dollar protocols left and right, and this just gets lost in the wind as a relatively modestly successful protocol. Back in end of 21, if you were a billion-dollar protocol, you were literally way down on the list from a total market cap perspective. So this is interesting. We'll see. We'll see how this plays. I don't. In the end, it's the market responding to the tokenomics as well as the price action, which is buyers and sellers. And what was nice was that Convex was involved day one on launch. So there's some interesting dynamics in play as compared to historically experienced high emissions protocols. And the gold standard for a high emissions protocol that is relatively successful is Curve, and that was dependent on the Federation, as we've discussed, and the kingmaker of the Federation is Convex. So involved day one. There's overtones of something interesting here, and it certainly wasn't nearly enough for me to invalidate this as potentially something that's systemically meaningful. Anyway, that's my sentiment there. Uh, Ethereum looks very interesting, and path dependence is risky. You could easily see a breach on the daily TWAP, and that's what we've been riding. So from a technicals perspective, when you're looking at charts, you want to find what the price action is riding. Price action will find a moving average and tend to mean regress to the same moving average over time. And then you'll see it swap to another moving average. But right about now, from a daily perspective, that was a nice mean regression to the 200 SMA convergence with the daily TWAP. And this was clearly a daily TWAP mean regression. If you zoom out from a monthly perspective, you could see what I'm talking about. Clearly breaches of the monthly TWAP to the downside. So it's not riding the monthly TWAP nor the 50 SMA, but it looks like this was a decent mean regression to the 10 SMA on the monthly. So if you go into the daily, the 10 SMA on the monthly and the 10 SMA, the time weighted average price on the daily more or less coincide. You also have the 10 SMA on the daily just above head. But this is a nice position. All things considered, with what the market is doing, there's basically pretty much all the reason in the world for a mean regression to lower levels and also a breakout to the upside. It just is what it is. So that's why path dependence is a pain. You could easily have a breakdown to a 200 SMA on the daily mean regression, and then it breaks out. So path, you get screwed. Destination, 2,500. You'd be good to go if you were destination dependent, which is just holding spot. So I think the destination for all these assets, 2030, is much higher. So in the short term, you can have plenty of downward price action, but in the long term, total currency supply of the dollar is going to increase. Liquidity is going to increase. The system is going to go through probably a convulsion at some point in the future. The destination seems pretty clear whether there's a convulsion along the path or not. And that's kind of the whole point I trying to solidify. Hey Dan, how are you, friend? CryptoTube, good morning. Nice reaction overnight from the little pullback. Yeah, it was a nice rally in equities markets yesterday. And frankly, Ethereum and Bitcoin had some really strong long liquidations. And it's a strong pullback. We are below resistance, so this is resistance 1. Breakout failure is a resistance 3, resistance 4, resistance 5, and we'll see. The last time we had the daily time weighted average price up here, it was April of 23. Higher time weighted average price as compared to August of 22. Zoom out to the monthly, we'll get some perspective. High time frame perspective. You know, this is just the rounding bottom. So what does this mean from a monthly perspective? This is clearly a breakdown, a breakout, a retest, and we're in the position to push for the higher high in the monthly. So we got 15 days left in the month, and it could take until the end of the year. This is like check back January of 24. And if it 2024 January, we're at 2200, and you close January at 2200, it's not incredible price action, but that's a candle close in a breakout retest higher high. And then what you're looking for is another candle to add additional confluence. So you have the trifecta of bullish confluence, which is the breakout, the retest, the higher high. And then what you want is an additional candle to confirm confluence to the upside. And this is nothing with regard to taking a position. This is with regard to our journey along the path and us finding our understanding of it. And finding our understanding of the path gives us comfort along the journey, so to speak. Hope that helps. What are your thoughts on Aladdin? Uh, Aside from FX, Cleve owns a lot of governance rights. So those boys at Aladdin, hasn't been front and center with regard to the market until FX is doing what it's doing. Yeah, I have a high opinion of what they're doing. My sentiment, and that's just my bias, is I don't need exposure, but they're be further becoming a meaningful part of the Federation, and they're getting the attention they deserve. So I'm happy for them, and they deserve this. That's a lot of an ecosystem they built. That's a lot of contracts. That's a lot of code, and now they're finally getting attention. So that's big kudos. Cleve has a lot of governance rights. If they had a bribe market, if they were integrated into the vote market, integrated into, Votium is very convex centric, but at least like hidden hand or vote market, they would probably convince a lot of financing to flow to rent their votes. So I don't know how that would work from a technical perspective. They know their contract, the implementation of their contracts, but that would be very interesting. So FX is going to get cash flow from LSDs, and in theory, Cleve could get the big cash flow. Right now, it's just their tokenomics strapped on to base CVX, and I think they just launched CVX CRV, so it's compounding, so it's a very useful protocol in that regard. I don't want the compounding, and that's why another reason why it doesn't suit my fancy, because I'm not interested in compounding. I'm not interested in selling assets at some point. I want the luxury of owning a piece. It's gonna get diluted, but the vote rentals that will flow to these protocols in a decade from now, in 2030, cool. Okay, you're going to get diluted, but the vote rentals are going to be a lot higher than where they are today. I'm destination dependent. Path dependent is maybe more like the compounding, and you're looking for it to appreciate, and you have to sell it at an opportune time to get the cash flow you're looking for, and I don't really want that. Maybe that helps. Maybe that helps. So they get big props. I maybe should have said things sooner to help or support their ecosystem and their community. But suffice it to say, that's what I'm saying today. CryptoTube, if we hit a heater early and make a big bag, which of the income bags you hottest on would you like to get into something solid? The only position I took was Prisma, and it was a small position. Most of it was just airdrop. Um, I don't see anything that I want. I'm not interested in taking any positions. I've had 2 years to contemplate owning something else in the market, and something new comes along. It's new. Sure, we get into a heater from a technical perspective. Throw around some capital. You know, folks that I know, and Messi put on Twitter that intent X, which is really cool. Nice protocol. I chose not to allocate capital to it. I had the opportunity to. I didn't. But that user interface is really slick, and it looks like something significant with regard to software. And it's a trading venue, a perpetual and and leverage and all those fun features from a trading perspective. So I look forward to using that Intent X. But we're not there yet for me with regard to me deploying capital from a trading perspective. I look forward to up only mode, but we'll see that from macro indicators that we look at where the system is becoming flush with liquidity, in which case we'll see those types of opportunities. And I wouldn't take those opportunities from a spot perspective because it's too slow and too expensive on chain, and we'll probably be seeing 500 gwei at that point, and base will be cheap, and then the transaction fees on something like IntentX are even cheaper. So that would be how to capitalize from a heater perspective, as you say. From a cash flow perspective, an incumer perspective, I don't see anything that I want that I don't have. I mean, even Aura finally got bumped up on its weekly rentals. That's nice. That maybe we got bottom with regard to rentals, and maybe it will gain some traction. I look forward to that. It was a nice dip down last night in its price. Let's see. I haven't looked at the technicals in a bit. Uh, liquidity. Where's the damn liquidity? There's another thing. There's not much liquidity. What's with the damn liquidity? 1,000. That's not a representation of liquidity. Where's all the Aura liquidity? It's on Balancer here. Aura ETH 5.4 mil, which is relatively illiquid. You're not buying any Aura with size. And this is why it's highly volatile. If this loads, and I could talk about it. Unfortunately, if it doesn't, I can't really talk about it. Maybe I get it from here. We could swap this out. Yeah, let's pop a watch list or USDT. Okay, this will give us at least some perspective, I believe. Yeah, yeah, 99 cents. Yeah, but this is also it's the same bottoming pattern we see for everything. It's the breakout and the retest. So, you know, that's where we are for everything. The breakout and the retest indicating the directionality reversal, and what you want is the higher high. So this is lagging behind other assets that have already retested and are producing the higher high. So this was a breakout, a bit of a retest here. This is the daily chart on November 8th, and it was a failed higher high. There's been some big accumulations. Structurally, this reminds me of Frax early on. This is also KuCoin. It was probably relatively illiquid. So these wicks, I don't know if they're super meaningful. Anywho, I hope this pays. I hope it pays more and continues to pay into the future. And what I'm looking for right now from my portfolio perspective is further reasons that this is going to serve me well into the future. I don't want extreme outperformance with regard to its price point. What I want to see is the vote rentals increase over time. So heading into like 2025 is where I want to see dollar per VL Aura double, triple. If the rentals tripled from here, do I give a crap whether it's sitting at $1? But the odds are, obviously, if the rentals triple, people are going to want to pay more for it, so its price goes up. But you're seeing it at 2025 at $1.50 at $2, and the vote rentals quadruple, go 5x on the money. You don't care about the price of the asset itself. That's kind of the perspective that I have when I'm looking at these types of assets. Horizontal price action. Hope that helps. Rupert, hey. Eris, any opinion on the FXS chart as well as Frax's future in this upcoming cycle? I had FXS up. I have a high opinion of Frax. As I mentioned earlier on Twitter, we'll pull up the tweet. I mean, whoever's thinking about Frax from taking a position perspective is late. It's off bottoms. Everything's off bottom. And what have we been talking about lately? Are you paying a premium or are you getting a discount? And right about now, a lot of people are paying a premium. Finally, I got something loading. Maybe. There you go. Yeah, this is buyers are late. Late often means you miss the train, which means you have to invalidate the. You wait for a retest or a retest. What you're going to buy at $7 versus 8? I don't know. That's why I can't stand trading. That's why entries are the hardest behavior in portfolio construction because you're late and then you pull up Solana and you're like, all right, it just keeps going. 61. This was a retest to where the hell did that retest? Where did that mean regress to? No way. I mean, it wasn't even a mean regression down there. Where's that bottom? It's kind of like a mean regress. Oh, maybe on the daily. Maybe that was a 10, maybe a 10 SMA mean regression on the daily. Let's check the 3 month. No way. There's nothing. It's too new of an asset. I don't even know where this thing mean regress to. So like hovering below the time weighted average price. It's like just riding it from a 30 min, even from an hourly and a 4 hours. All right, fine. Maybe a 50 SMA mean regression on the 4 hour. So it's kind of riding the 4 hour. What it really needs to do, considering all the appreciation lately, is it needs to go horizontal for some bit, allow folks that have bought and are in profit to exit their position and reprice uh, new entrants to here. It needs to reset. And you don't want to see something go straight up because then it comes straight down. People need to take profits in order to reset their cost basis. It'd be nice for it to mean regress and hover between 52 and 60 for another month. Let it hover for a month. And then you could feel comfortable taking an entry at this relatively appreciated price without fear that it's going to mean regress to a lower level. Hope that helps. Um, I guess that looking at Sol was a perspective on Frax. And Frax, this is full on breakout mode. This is very nice to see. From a weekly, it's Wednesday, so what's the odds that it closes above $7 by Sunday? And that's where we're at. This is a breakout, a multi-year breakout, because that's a resistance all the way back to September of 22. Resistance, bear in mind this is a failed breakout. All the way between January of 2023 until May of 2023 was a failed breakout. So resistance, 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 and now another breakout attempt. So to have confirmation of breakout, what you need is the retest. So Frax obviously got ahead of itself earlier this year. You need the breakout and the retest of $7. So just because it doesn't retest doesn't mean it will ever retest, but a retest is additional confluence, giving comfort that the price probably will not go below that level in the future because it did not go below that level when people tried to send it below that level. So there was no retest here, and clearly the entire move above $7 was invalidated. Hope that helps. Diego, hi Noah, for what are you here? I am here because these companies, these enterprise, are better companies for investment purpose than anything I see in the United States equities market. I'm not here for price action. I'm not here for longing or shorting, path dependence. I'm here because historically, a decade ago, when I was a baby, I wanted to be a dividend investor and I wanted to own companies that produce cash flow. And, at points with my wife and my father when he was alive, I wanted to own a pizza shop. I wanted to own a business that produced cash flow, income. And these companies are the best expression of anything I ever wanted to do with investments that I've ever seen. I don't want to own 4, 5, 6% paying dividend equities that have a huge amount of debt or no debt and equity like Realty Income Corporation, which is relatively healthy, who gives a fuck if it's paying 6%? If you have $10 million, 6%, great. You're making 600 grand a year. But 6% is not a lot of room for error with regard to consumer price inflation. Has a lot of risk because of humans running the company, humans on the board making subjective decisions with regard to debt issuance, dilution of shareholders, adjustment of the dividend rate. So I'm here because these dividend offering enterprise have a total addressable market of the planet, whereas a United States company, even if they operate internationally, has a total addressable market of the reach of the New York Stock Exchange or NASDAQ. It's whoever could interact with those two marketplaces. So there's a lot of friction interacting with those marketplaces, whereas with these assets, one of which we're looking at right here, it's permissionlessly accessible from countless marketplaces around the world, permissionlessly accessible from endless jurisdictions, and the cash flow is not subject to humans. It is subject to the coding of the smart contract, the rules of the contract, and the rules will be vigorously executed deterministically no matter what a human wants. And this is obviously dependent on your due diligence when you're inspecting a particular protocol. Optimally, you want those rules to be unchangeable by humans, and that's the qualification of immutability. And that is the primary components in my portfolio are immutable protocols that are mathematically protected by mathematics, guaranteed to pay me predictably every time they're expected to pay me. And that means in 2030, my portfolio will exist. The contracts will exist. And if the contracts continue to exist and the market grows into what we expect it to, and the liquidity, the pool of liquidity around the world grows into what we expect it to, the contracts are going to do what we expect them to, pay us, because they're deterministic and immutable. That's why I'm here. These are better investments than any enterprise I could possibly find from a traditional equity standpoint. One, and two, these investments are enterprise that are attached to the financial economy, whereas equities are much more attached to the real economy, even the banks. The banks give you no fucking cash flow from their business operations, so they're useless from the financial economy. And these assets, I think, have much more potential because the financial economy I expect to grow much more than the real economy, albeit from a nominal perspective, the real economy will probably grow as well, which is exactly why GDP is relatively elevated, and that's exactly why the S&P grows over time, about linearly with money supply. So the real economy gets dragged along as the financial economy just inflates, inflates, and inflates. Hope that helps. This is an interesting topic that everyone thinks about. Advantage of the blockchain. I don't give too much of a crap about the advantage of the blockchain relative to traditional technology, and I focus on the key characteristics that the blockchain offers in my mental model, and that is immutability and determinism. And that is something that cannot be offered by a traditional enterprise in any way, shape, or form. So the benefit of the blockchain, permissionlessness is a characteristic of these enterprise that I appreciate. And what do these enterprise do? The biggest thing is what I mentioned I'm interested in on Twitter. Let me find the tweet. I'll pull it over. How does that sound? I'm more interested in on-chain synthetic dollars as compared to on-chain bank liabilities. Settlement currency is limited, but synthetic liabilities are limitless. And that's everything. So The reason I'm here is because I understand the way the global financial system works. I understand the global financial system is going nowhere for a really long time. We can have all the financial catastrophe you want, and nation states will massage and paper over and rectify liquidity issues, and they will allow the system to continue. You don't bet on the world ending, because if the world ends, no one's there to settle with you. Some famous quote that we see time and time again on Twitter. So I'm not interested in what happens when the financial system ends. This financial system is going to continue. These countries are going to be here in the year 2030. There's going to be a variety of conflicts, geopolitical complexities, but they will be here in 2030. This financial system, in its current form, it may mutate in a variety of ways because it's a mutable system, but it will be here. And therefore, I very much want to see what these assets do in the future, because they will be here as well. And I want to attach myself and my revenue to be from the printing of dollar liabilities, which is the biggest business on the planet. So when you're looking at like equities, what does the company do? Real estate, manufacturing, mining, refining, shit like that, technology, chips, cars, Tesla, so on and so forth. What's a business that's bigger than that? Banking. What's the biggest business in banking? Credit. There's mortgages, and there's HELOCs, and that's credit, and there's credit cards, that's credit. What's the biggest business in credit? Turning collateral into dollars. And to understand that, you have to understand the history of the eurodollar market. And we're not going to get into that, but the point is, you could turn a bond, you could turn a piece of debt, you could turn something that is identifiable as having value into dollars. And the whole relationship and liquidity with synthetic dollars and real dollars, so you could achieve settlement, because a merchant usually wants real dollars, or at least a bank liability of a real dollar. And that's dependent on liquidity, and those pieces are very much here. But that's the biggest business in credit. Collateral, making a synthetic dollar. That's why I'm here. So that was a great question, actually. But that obviously also unleashes the entire conversation of that's rich and robust and has all this nuance that we've been discussing for years at this point. It's not speculation on price action and stupid crypto. You can imagine what college students say about, oh, crypto, I own Dogecoin, I own a coin. What is it? What are these systems? What is this technology? And we've gone as far as saying they're businesses and they're global and they have the potential to be bigger than the biggest banks on the planet because they're permissionless. And they do exactly what the biggest banks on the planet do in many regards. How about that? Also, have you taken a look at DopeX V2? I've heard that Tetra finally got it off the ground. I haven't looked. Yield is obviously high because it's not diluted. I've been meaning to take a better look. That's separate and apart from any interest, but I always have interest in looking. So I haven't yet. I can't speak to it. Killis, good morning. Always a pleasure. The service that these crypto companies gives to us are better than traditional companies. Yes, but depends what service, and the service that you use versus what the world's enterprise, what the world's businesses use is another story. But what is certain is the services that these crypto companies are providing are services that the world consumes to the tune of hundreds of trillions of dollars on a daily basis. FX markets are in the trillions, and derivatives markets are on potentially the quadrillions, 1,000 trillion. So the capacity to turn collateral into a dollar liability is trillions and trillions of dollars worth of business worldwide, outstanding, and on a daily basis, it's trillions of dollars worth of financial activity. Obviously, FX considered. These are the micro caps of the biggest businesses on the planet, and these micro caps are structured such that in such a way that the infrastructure, these businesses are so much more stable and protected and guarded from the debtor as compared to the traditional enterprise structure. These are, you're looking at you're looking at what Uber did to the taxi industry. It was just so much better. And that's what these companies are from a financial perspective. So much better than the way banks are positioned. There's so much more protection for these companies compared to the banks. It's crazy. Hope that helps. In terms of efficiency, not so sure. Efficiency. Well, you could get probably a $50 million loan on Prisma for 2%. And why is it more favorable? One, it's 2%, and two, prevailing market rates from the Fed are over 5%. So you're going to pay half the amount of interest. And two, if you're borrowing, MKUSD and you're swapping to USDC, you're getting your loan. So what are your risks? You have to do your risk assessment. So that's why 2030, a different amount of capital could be chasing these types of enterprises because it takes time to build linearness and trust. So they are more efficient in regards, and there's different risks, but those risks are decaying over time. So these are all factors part of this equation, and that's why destination investing means target 2030. This is going to be pretty damn interesting. Coincidentally, my traditional equities portfolio was also target 2030, having been started in like 2014, 2015, so that was a 15-year time horizon. In the crypto market, you're able to have shorter time horizons to assess whether your narrative is still valid or not. And we're in 2023, and I'd say about 7 years. That's my time horizon. Even when I was younger, I had these longer term time horizons, but I didn't really have this rigorous mentality and methodology that you, with narratives and seeing, sure, it's going to take 15 years for this, so that means you literally have to wait. So imagine looking at a 15-year chart, and then that's exactly why nowadays when we're looking at shit, especially with stuff like Ethereum, which is a heck of a collateral. It's not the same kind of collateral as U.S. government debt, but it's one hell of a collateral. In fact, it's such a collateral that on Prisma, you're able to print dollars with that collateral. I mean, literally, that's everything we talked about with regard to banks. You take collateral, you print dollar liabilities. That's literally what this page is. You're taking a collateral and you're printing a dollar liability. With your Ethereum, you could print synthetic dollars, convert those synthetic dollars to a bank liability, and a on-chain bank liability is USDC, and you could then take that bank liability and put it into a bank, and you could pay a debit card, and you could go to the convenience store, and you could go to the supermarket, and you could buy a car, and you could do whatever the hell you want to do. It's an actual settlement currency. So this literally is a bank. Lots of questions with regard to where is it? It's kind of nowhere, but it's kind of everywhere, and that's fucking crazy. That's nothing like New York Stock Exchange or NASDAQ. But literally, you're staring at a bank. That's crazy. And you're literally staring at a money market. You're literally staring at banking infrastructure. Why show it just for visual purposes? This is a bank. You don't need a government to say it's a bank. It literally is a bank. That's crazy. And that's the last 3 years have shown us. Deposit a form of collateral, and what's interesting is you can leverage shit because there's interesting forms of collateral that they've adjusted lately. They've had some issues. But collateral, borrow. That's a home equity line of credit. You're providing a house to a bank, and it takes a month for those assholes to do underwriting, and they give you dollars. Same thing here. So that's why the whole RWAs, the whole real world asset narrative is very interesting. Tokenized property rights, so on and so forth, because it's all collateral. The whole world works on collateral, which has equity and dollars, and in the scale and scope of the financial system of the planet, nobody uses dollars. It's all dollar liabilities. So this is dollar liabilities. How about that? How about that? Raul, a pleasure. CryptoTube, where to track VL Aura yield these days? I don't know. Ever since the llama went offline, I really wish I had this because it makes for really easy biweekly voting. So without Hidden Hand being on the llama, I mean, you really need to go to Hidden Hand, and you don't have any way really to inspect the votes. I asked this on Discord the other day. Nobody really knew. Um, it's kind of just Hidden Hand. That's the only way to know, to get a sense what votes are outstanding. I'm in the same position as you. Seth, where can we find the capital gains? For me, not right now. The market doesn't have enough liquidity. What we're seeing is the narrative. We're seeing the bottoming process. We're seeing directionality reversal. We're seeing the higher low, the higher high, and we need to see the higher low. There's plenty of reason for systemic volatility. For me trading, I need that liquidity flush market. And for instance, this isn't a liquidity flush market. This is a marginally net zero sum game market. This is a negative sum game on Ethereum mainnet, but it's marginally negative, minus 0.34. That's basically 0%. So for me, you see 2% positive sum on this chart, you're going to see altcoins going absolutely ballistic. So this is why this chart is so meaningful. And what I want to see from a trading perspective, because I'm not going to be in a position early, I want to see the altcoin go ballistic. I want to see it dump, and you do a fib retrace, so on and so forth, and you find bottom on that. And as long as it's a positive sum environment, anything sold is going to get bought. And that's when you get your symmetrical triangles, that's when you get your ascending triangles, and that's when you could easily get 20, 30, 40, 50% rips on a breakout of an ascending triangle, and that's when you can make multiples on your cash position. But that environment doesn't exist for me right now, and I have endless patience. I don't like to take risks. I definitely am not path dependent, and in the overall composition of the portfolio, but I will be path dependent at times with very rationally sized positions. And I'm probably not going to do it spot. In 2020, 2021, we did a fair amount of spot activity. I'm not going to be trading using curve at 500 Gwei. And I'm probably going to find one of those nice, I don't think it's going to be a centralized implementation, like a traditionally centralized implementation. That's why I kind of am keen on the folks that are built in 10x, and that should be pretty interesting. I look forward to using it when the time is right. So the capital gains for me are not in this type of market. But clearly we do this stream twice a week, so I'm going to be screaming when there's some very interesting, obvious opportunities abound. This is not right now for me. Is there an on-chain wallet that you own and we can follow? No, I don't really publicize it to everyone. I kind of historically talk about it on Discord, but I certainly don't make it public. I'm not too fond of the 100% transparency. I mean, basically the folks that know my addresses, they already know them. But it's not like they're just freely circulating. But on Discord, I do have old shit, which is pretty much the same composition of the portfolio, more or less. So there's a lot of screenshots in there of old compositions that I had, which are basically the same as they are today. And I talk about what I own. Frankly, you guys ask me, and I tell you guys what I own just the same on the stream. But on Discord, it's very nice. I can't guarantee Discord is easily accessible. There's kind of free ways to access it, but predominantly there's a nominal fee associated with it, and that keeps it a relatively restricted community. I don't want, the whole gossip and conversation shit going on in the threads. What I want is, highly professional folks that, are moderately capitalized to the tune where the nominal fee is basically zero, and they all have a similar destination mindset, and not path dependent. If you're not path dependent, you don't lose your money. There's no such thing as losing your money if you're not path dependent. Um, then you have destination dependence type considerations, where the risk profile of certain protocols. Obviously, a lot of folks lost money with Luna and whatnot, but we've learned a lot since then, and folks that have lost money have a new sense of risk assessment requirement, and that should make for a very interesting experience heading into 24 and 25 and future cycles, because we have this rigorous methodology nowadays, and destination dependence entails we're going to be here in 2030, and that's going to be a very interesting market. Like a profile on DBank, of course, every address is available on DBank, but I don't. Clearly, you can see the little version down here. I monitor my stuff in DBank, but I don't share it to everyone. Cash position of the portfolio, investments make money. Money goes in the cash position. Cash position, that's income. That's your savings account. There's no difference between stablecoins, Ethereum, and Bitcoin and dollars in a bank account. In fact, to some degree, I feel a little bit more comfortable with certain types of stablecoins as compared to dollars in a bank account. Albeit I had regional bank exposure and I consolidated into GSIBs, but still, something irks me about capital in a GSIB in a bank account. I mean, you need it because if you're going to write checks, oh yeah, paper checks. You tell that to a kid in high school, and they're like, "What the fuck is a paper check?" But a lot of people in industry still use paper checks, and it works. So you need dollars in a bank account to use that payment mechanism. Debit cards, you use USDC. Debit cards, you use Bitcoin and Ethereum. So it's literally just a new age bank account, and it's just stable coins, Bitcoin, and Ethereum. Why is that not a bank account? You just need your Juno account or whatever debit card is your favorite debit card, and swapping this capital to a bank account is relatively painless. Complexity there is banks and the risk of them not liking those types of transfers. I've never had historically any issues with like a Gemini withdrawal to a bank account. But in any regard, debit cards are the way to go. They have their banking partners, and they're literally designed to process credit card. So Juno does a great job at that. Not going to have any issues there. Last couple of questions. We'll wrap it up for today. Tapsy, funny enough, would you ever be able to figure out stablecoin payments for your Discord? Yeah, man. The problem is I use a piece of software. Like Discord, anyone could create a Discord server, and then I was like, how do I make it subscription? And now it turns out that Discord has a subscription service, so I have this old LaunchPass subscription service. Discord has their new built-in subscription service that uses the same Stripe account, and I'm not going to start having. It's a hot mess because I have two separate subscription services, one from Discord and one from LaunchPass. What's really needed for me is to keep yelling at LaunchPass to get crypto payment integrations, and that that's never. It's not like LaunchPass enable crypto. That would totally make sense. So Tapsy, I've been as frustrated as you are for all this time. It doesn't make any sense. It's like just integrate that shit and let's get on with it already. But it is what it is. Seth, I hope that helps. A lot of folks want to be told or given answers to questions about what to do, when to do it, why to do it. And I'm just a storyteller about what's going on today. Why am I interested in these things? What is the potential and how to engage with that potential from a rational and sustainable way with rigorous narrative, in-depth storytelling, and shit that'll allow me to outperform and achieve what I'm looking to achieve. Expectations need to be reasonable, ladies and gentlemen. Set your expectations as reasonable and set them. You have to set them. Like, if you're like, I want to make a lot of money. No. What is your goal? Like, all right, I need a house, so I need like, 800K. So how much do I need to make 800K? And you need, you need a 10 chip, and you need the 10 chip to go 100x on the money. That's pretty cool. So what are the odds of one of the protocols that we invest in going 100x between here and 2030? It's probably actually pretty good. So that's not necessarily an income perspective. So maybe Bitcoin and Ethereum. Bitcoin and Ethereum. Why can't Ethereum be 200K in the year 2030? Be a hell of a market cap. Trillions of dollars. But these are the types of things that aren't unreasonable. But what's important is time horizon, sizing of positions, respecting the portfolio, not taking excessive risk, and being destination dependent rather than path dependent. And set your positions, being considerate of what you want to achieve in the real world, and they have to be reasonable. You're not going to turn for $5,000 into $50 million unless you're taking excessive risk and trading, and that's the vast majority of people who lose their money doing that. Anyway, that's a digression. I hope everyone have a decent story and understand these markets for really what they are rather than what the majority think they are. And it's Wednesday. I will see you again on Friday. Tell everyone to subscribe. Link in the description for the most rational community in the entire crypto space. See you later this week. Peace.